Wall Street will be watching Facebook again this morning after shares fell hard and fast on Monday. The stock finished the day 11% lower than its initial offering price on Friday.
Rebecca Jarvis is here to tell us what's going on with the most talked about IPO in years. So what's going on?
Well, I think what's going on ultimately here is an oversupply of shares, and that's what all of my sources are telling me. There wasn't the demand that was anticipated from institutional investors, and those are the investors that buy into these IPOs and keep the price afloat so that the retail investor, people like you and me, can buy into it and feel safe, comfortable that it is a stock that will continue to grow. And if you think about it, it's very much like the housing market. In the housing market, there are too many homes on the market and therefore not enough demand, and as a result, prices have dropped. So it's very similar in that respect.
But what about questions about the economic model, the business model of Facebook, and whether they will be able to monetize the fact that they're going to have 1 billion people?
That's
connected?
The long-term story here. The long-term question with Facebook is, can they figure out a way to grow their advertising base? Because right now, 85% of their sales come from advertising, and growing their user base is not enough to say to advertisers, would-be marketers, hey, come play with us, come advertise on our platform, because so far not every advertiser has seen the ability to make good on that investment, to make money off of it. And we heard, as I reported earlier, General Motors has dropped some of their advertising off of Facebook because they don't see it paying off. And that's the big question, because it's an untested water.
So then for the people who did get in, who bought it at $38 and then saw it drop, was it a smart investment for them? And when will they know?
Well, it depends on what your investment horizon is. Right now, in the near term, of course, it looks like if somebody was trying to buy into Facebook and make money in the near term, then no, it was not a smart investment for them because they've lost money already on that investment. But I think there's a big lesson here. The frenzy, the hype, stay away from it as a retail investor because generally speaking, you're going to lose on that front.
There's also this question about Facebook, whether they will be able to become a kind of search engine in their own right.
Well, and that's the part of where their money comes from, Charlie. Advertising is exactly why they want to be a search engine. It's exactly why they want to play in the universe that Google plays in, because that is for both of these companies. Advertising is the big source of revenue. And sending people to different locations on the internet as a search engine is what makes you money in advertising.
Speaking of that, I ran into Larry Page yesterday, the CEO of Google, and this is what he said to me about the competition between Google and Facebook.
So you're worried or not worried about Facebook's competition in search?
I think that it's something we take seriously, like people's social media. I think it's been unfortunate that Facebook has been pretty closed with their data. And I think we would certainly, we're in the business of searching data. We don't generally turn it down when it's offered to us. So I think, in general, I think we'd like to see content on the internet being made more open and so on. We had an issue with them over contacts,
right?
Where they, from a user's perspective, you say, oh, it's great. I'm joining Facebook. I want my contacts. And Google, we said, fine. You can get them from Google. And the issue we had is that then Facebook said, no, Google, you can't do the reverse. And so we just said, well, users don't understand what they're doing. They're putting data in, and they don't understand they can't take it out. And so we said, well, we'll only participate with people who have reciprocity. And we're still waiting.
For them to offer reciprocity?
Yes.
Yeah. And do you think they might in the future?
I mean, I hope so. I imagine they'll be forced to eventually if they don't choose to. But I think the idea that you'd hold your users hostage, kind of, and they have some reasons for it that don't make sense. But that you'd hold your users.
What are their reasons?
They claim it's a privacy issue, but it's not really, because they do it with Yahoo. They just don't do it with us. But I think that you don't want to be holding your users hostage, and we've really, we felt that we want there to be a competitive market. We want other companies to be able to do things. So we think it's important that you, as users of Google, can take your data and you can take it out if you need to, or take it somewhere else.
This might be one of the very great competitions in American business, Facebook and Google, and also Amazon and Apple. There are antitrust questions as well. Today's New York Times, Europe weighs antitrust case against Google.
Yeah, I mean, there's antitrust questions about how powerful Google is becoming in Europe. And if the antitrust questions are answered in the affirmative, that Google has become too powerful in Europe, it could certainly have a ripple effect here, where the case has really been weakened over the years. Google has also been facing those questions. But Facebook, too, has its own lawsuit. It's a class action lawsuit that came up a couple days ago, right as the IPO was debuting for Facebook. And that's about privacy. And both of these lawsuits, the antitrust lawsuit for Google, the privacy lawsuit for Facebook, the sources that I speak to say once these are decided, we're going to know the future of these companies, because we're going to know if they can continue to do business the way they do it, or if they're going to have to change the model. If they have to change the model, it'll be lesser income, lesser revenue for their companies.
Thank you for joining us this morning, Rebecca.